All right, ladies and gentlemen, we're back at it, bringing you another YouTube video for you guys. Thank you so much for everybody being here. And in this video, I made a tweet about 2 days ago asking if there was any questions that you guys had talking about the supply and demand methodology. So I thought I would just go through them, 3 to 4 questions. But before we get started, for the last 2 weeks, I haven't actually posted a video because I've been kind of just really been focused in on helping out the new guys that have recently joined my private group. So that's where all my attention was. I did switch my whole learning management software just to make it a smoother experience for everybody in the private group and for you guys, because what I did was I changed the whole website and created a free course talking about supply and demand. It's basically all my tips videos rolled into one mini course for you guys. So if you guys want to go to the website, I will link it down below. It's a free supply and demand course. It's pretty good, about 2 hours worth of stuff. Just click yes, I want to become a trader, or yes, you want the free masterclass, and you will be enrolled right away. Just check your email and you will get the login details for that. We basically talk about supply and demand basics, how to identify, how to draw, and all that, how to find these imbalances. Talk about a little bit about multiple time frame analysis, and then talking about trade reviews and the weekly prep, something we do in the private group too. And I give you my top 3 tips too as well. Okay, so let's get straight into the questions. Okay, first question. Let's see. I think you should talk about a zone within a zone. That is a good question because actually, when we did our Sunday meeting, I actually talked about a zone within a zone because I remember that question. And if we, for example, this was the exact example that I brought up. A zone within a zone is kind of a multiple time frame analysis addition to it. So if you mark out a 1 hour supply zone, this could be used for 4 hour, daily, weekly, or whatever. On any time frame that you draw a supply or demand zone, and then you go to a smaller time frame, you are going to find smaller time frame supply or demand zones inside that supply or demand zone in the bigger picture, right? So here on the 1 hour, you can see this little, supply zone right here, right? Mark that out. And if we go down to a 5 minute time frame, we are going to find 5 minute supply zones inside that 1 hour supply zone. So on the 1 hour, it's just one supply zone. But here, if we go down into the 5 minute, we are going to find 5 minute rally base drop supply zone, 5 minute drop base drop supply zone, and another 5 minute drop base drop supply zone. So that's what it means with, a zone within a zone. Those zones could also be created after prices come into a zone. You can create new smaller time frame zones because price usually turns from inside out. That's something that we talked about in the free little masterclass for you guys. So you can create new zones inside that 1 hour zone. That is also the concept of a zone within a zone, or something I like to call multiple time frame analysis. Okay, so hopefully that answered it. If not, do the mini course, man. That's gonna 100% solve your question there. Okay, next question. The mastermind, he asked, talk about trade. Uh, how to trade ranging markets using supply and demand. That is a good question. And here, if we look at the daily time frame of USD CAD, we will see that about 2 weeks ago, we were in a sideways range going like this. So how do I play these sideways ranges? I simply buy low and I sell high. I know that's what everybody says, but it's true. But I don't just go off and just say, okay, I'm just buying every single pullback instantaneous. What I will do is I will go down to maybe a smaller time frame and I'll wait for prices to turn, and then I will try to catch pullbacks on its way back up. And if you actually go back to New Zealand yen, I did a trade review on this pair about maybe a month ago, coming up to maybe 2-3 weeks ago. Prices were in a daily range. Buy low, sell high, buy low, sell high. That's all we were trying to do, is sell in supply, buy in demand. And if you recall, I think we caught, what short was it? Was it this short? I think it was. You'd have to go back and look at the trade review tab, or not the trade review tab, but my videos. Go to videos. Maybe it was this one. Bitcoin. I'm not too sure. I think it was the most recent one though. But that's how I basically play the ranges. Buy low, sell high. And this goes for every single time frame. Doesn't matter if it's, weekly as my biggest, or the 4 hour as my biggest, or the daily as my biggest, right? Buying low, selling high. Always buying in demand, always selling in supply. That's what I always do. Okay, next question. Hey Austin, since you haven't dropped a video yet, could you talk about when you use the 15-minute, 5-minute, or even the shorter time frame as confirmation entry within the 4-hour supply or demand zone? I notice sometimes you use different time frames for the confirmation entry. Yeah, so sometimes you see me when I often talk about, okay, I'm waiting for price to turn from inside out. I talked about that in the free masterclass, by the way, so check it out. I talk about how, I'm waiting for smaller time frame zones. And what you're asking here is sometimes you see me use the 15-minute, sometimes you see me use the 5-minute, and sometimes even smaller time frames, right? So basically how I would answer this is price has to turn from inside out. Let's go to USD CAD. Sorry, guys. Um, this was more recent. So let's just say we have 1-hour supply. Let's go down into that 1-hour supply in there. So sometimes you'll see me go for the more aggressive setup, sometimes maybe like, the lower time frame confirmation and not the higher time frame confirmation. It really just depends on the setup. Am I in a counter trend trade? Is my higher time frame counter trend, or am I trading with the trend? If I am trading counter trend, maybe I want to see a higher time frame start to change before, the lower time frames, or I want that, that higher time frame to also change, I should say, and not just a lower time frame, because having a 4-hour evidence of price turning is better than the 1 hour, because the 1 hour always has to change before the 4 hour. But if you can get the 4 hour, that's even better than only having the 1 hour. You know what I mean? So here prices came up into that 1 hour supply. We're on the 1 minute time frame, and prices showed evidence of price turning from right here. It was this candle right there. Now, if we go to the 5-minute, we're not going to get evidence of price turning until somewhere over here or over here. So let's go to the 5-minute. I talk about this in the masterclass, by the way, guys. So here on the 5-minute, we didn't get evidence of price starting to turn because we broke upward momentum from right here. Okay, and if we go to the 15-minute, we're probably going to see confirmation on the 15-minute over here. 15. Let's see if we can get it. So on the 15-minute, we actually didn't get it until over here, because this was when the next demand zone was getting removed on the 15-minute, this rally base rally. Okay, so what I just talked about was how prices turn from inside out. The 1-minute is going to change here, the 5-minute is going to change here, and the 15-minute is going to change here. You notice how prices turn on the smaller time frames before the larger time frames. Having this waiting for this setup to happen is better than waiting for this setup, the 1-minute. So having the 15-minute is better than having the 1-minute, but the chances of you missing out on the trade are greater than the 1-minute. But the 1-minute, let's just say the lower time frame, but the lower time frame is you might get stopped out by the noise. It might be a fake move, and then prices go up higher like it was, right? The 5-minute was the one that would have won. If you look at the 5-minute, the 5-minute was the setup because we got the evidence of price turning, and then that was your setup. But on the 1-minute, if you recall, that was your setup, right? But if you waited for the 15-minute down here, you never would have gotten the pullback what you wanted to. So you might have missed the trade. But usually these higher time frames are better. So it really just depends on which one you want to go with. It's really up to you. So hopefully that answered it. That's how I do it. If you do something totally different, then do whatever you want. I don't like to tell people how to trade. So that's my point of view on that. Okay. So that's basically it. I will have a new video for you guys on Friday for you guys. Just want to say thank you so much for everybody watching this video. Once again, the link for the free masterclass talking about the supply and demand will be right down in the description below. All right. Yes, you want to become a trader, fill it out, check your email, and you will get the login details from there. All right. I would love to hear your guys' review once you guys go through it. And if you have any questions, let me know. All right. Have a good one. Cheers.